You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
Hello, everyone, and happy Friday, end of the week. Definitely a lot to talk about as well. And thank you to everyone joining us on the live call as well. I hope everyone is having a nice week as well. And if you have been trading, I hope everything has been going smoothly as well. Today, even in fact, before the call, there was a great deal going on with Ukraine and Russia. So I hope you are trading smart and just keeping the risk less than normal, just given the uncertainties and volatility around the event that is going on still. So given Friday, we do have the USD-CAD and CAD pairs in focus with Jin. We've got myself going through the DXY and the Aussie equity markets, and we've got Gim going through the recent OPEC Plus meeting that took place, and also the Bank of Canada meeting that took place as well this week in regards to the interest rate decision that was made. But before we get into everything for trade ideas and market commentary, I will just share the risk disclaimer now. And any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And for the LCMS club members, we are happy to answer any questions. And also, if you are in the LCMS Trading Club EcoFin group, please feel free to ask questions there as well if something comes to mind after the call, and we are happy to help. So just to get things kicked off, we do have Gim here going through the Bank of Canada interest rate decision and also the OPEC Plus meeting as well. So I'll hand it over to you now, Gimmy.
All right, thank you, Scott. TGIF, everyone. Okay, happy non-farm Friday. Okay, so first of all, let me head over to the OPEC Plus statement. Okay, so on when was it again? I think it was on yesterday or Wednesday. Okay, the OPEC Plus meeting concluded with no change in the proposed hike in oil production. Okay, that means they will they have decided to hike oil production by 400,000 barrels per day for the month of April. Well, despite oil prices going higher and higher and higher. All right, so pretty much expected from the OPEC Plus, but what I was actually curious about is how will the OPEC Plus think about this whole ongoing Russia and Ukraine war. Apparently they did not comment much, although they did put it here, it says that current volatility is not caused by changes in market fundamentals, but by geopolitical developments. So geopolitical developments, I would say it's a hint. It's actually a subtle way of saying that current prices, oil prices, the volatility in oil prices at the moment is actually caused by this whole geopolitical developments, aka the Russia-Ukraine ongoing tension. So I think I don't know why, but I mean, my view is that I think the OPEC Plus is just trying to play safe, not trying to pick a side to stand stand on, stand with. All right, just in case, because keep in mind that Russia is actually part of OPEC Plus, all right, and the OPEC Plus, specifically the Middle Eastern countries, Saudi Arabia and so on, they wouldn't really want to get involved in this whole tension between Russia and Ukraine. I mean, after all, well, their whole relationship with Russia is just on oil and oil production and things like that. So they want to keep their relationship strictly to just whatever's within OPEC. So that's pretty much it for the OPEC Plus. So because of this, and of course with the ongoing tension, we are now seeing oil prices above 100. I haven't got a chance to check my oil prices earlier on, but I believe it's still like some $110 per barrel, for the WTI crude, and anything higher than that for the Brent crude. Okay, so oil prices is high. Unlikely, okay, unlikely, at least for me. I don't think that oil prices will be coming back down anytime soon. Okay, and early on today, there was another headline on the whole war. Okay, and I think it was said that the Russian forces, they were actually attacking quite the Europe's largest nuclear plant, okay, in Ukraine. All right. So fortunately, the Ukrainians managed to shut down the power plant. Okay. Otherwise, I cannot imagine what kind of disastrous thing is going to happen. Okay. But even so, I really do hope that they will cease fire soon. All right, and just talk things through and things like that. Okay. And of course, when it comes to all this talking, all right, I think this week we can still expect more discussions from both countries, both parties. Okay, and I believe there will be more developments coming in. Okay, it's just a matter of whether it's positive or negative developments. All right, so at the moment, for sure, okay, oil prices is definitely going to be at least as high as at the moment at the current levels. Okay, and I wouldn't be surprised at all, okay, that if oil prices were to go higher towards like 130 or $140 per barrel. Okay, so OPEC plus, no change in oil production hike. The next meeting will be early April, okay, to decide on the oil production hike for the month of May. All right, so hopefully by then we get more certainty from this whole geopolitical tension coming in. Okay, so that's it for the OPEC plus. Any questions on what went down? I don't think there's going to be any questions because it's pretty straightforward. Okay, if there's no questions, let me move on to Bank of Canada, which is, I feel, something more interesting. Okay, so on Wednesday, the Bank of Canada hiked interest rates, okay, by 0.25%. Okay, and that's a good thing, right? So over here you can see this is the statement. The Bank of Canada today increased its target for the overnight rate to 0.5%. Okay, so previously it was at 0.25, and then they hike it, they increase it by 0.25. Hence, right now, we are seeing a 0.5% interest rate in Canada. Okay, and then the bank is continuing its reinvestment phase. Okay, of its so that means at the moment, the QE has already ended. Okay, in Canada. All right. So for any maturing bonds, okay, the Bank of Canada will still be purchasing new bonds to actually replace the maturing ones. All right, which is why they say it's continuing its reinvestment phase. Okay, and then of course, pretty much expected, the central bank actually acknowledged that this whole war, Ukraine-Russian war, okay, is a major new source of uncertainty. Okay, and since it involves a lot on oil, okay, and oil is directly correlated to the Canadian dollar, so it will definitely have more impact on the Canadian dollar than probably on the other major currencies. Okay, of course it depends on commodities as well. All right, so pretty straightforward. Okay, I would like to bring your attention down to where is it again? Over here. Okay, as the economy continues to expand and inflation pressures remain elevated, the Governing Council expects interest rates will need to rise further. Okay, so all in all, okay, this time around during this session, things pretty much go as expected. Okay, a 0.25% hike. Although during the prep for this release, I was saying that if there's going to be a 0.5% rate hike instead of a 0.25% hike, we will likely see a strengthening of the Canadian dollar, a pretty strong strengthening. Okay, but then unfortunately we only see a 0.25% hike. Hence, price action wise, okay, in terms of Canadian dollar, it actually strengthens slightly. Okay, I remember I was actually waiting for the news and to be released and having my eyes stuck on the charts. Okay, Canadian dollar ended up just strengthening for a short period of time, probably like for a few minutes. Okay, and it was only like some 10 or 20 pips kind of a strengthening. Okay, before reversing its move. Okay, so it's no surprise here. And then, like I always said, whenever there's no surprise, okay, then price will be rather muted. Okay, it's only when there's a surprise going on, then that's when price will move more. Okay, will be more impactful. Okay, when it comes to price movement. Okay, so that is for the Bank of Canada monetary policy decision. Okay, now keep in mind that earlier on today, okay, at 12:30 GMT plus 8, okay, the governor of Bank of Canada, Keith Macklem, he actually held a press conference. All right, it wasn't. Well, it actually states that it's actually a press conference about the economic progress report, audience questions expected. All right, so I think I was sharing with the Traders Club members on Tuesday evening, okay, that this is not, although this is not a official monetary policy press conference, okay, but something tells me that he may actually talk about monetary policy related issues, okay, and if not, the audience, okay, journalists or audience in general will definitely probe Macklem on the Bank of Canada's recent decision, okay, which is just like 2 days ago. Okay, so apparently, okay, there has been some, I would say, couple of points to be highlighted. Okay, that tends to put the Bank of Canada in a more, I would say, more hawkish position. Okay, so this is the opening statement. Okay, so at 12:30 GMT plus 8, it was the press conference, and then at 4:30 GMT plus 8, okay, Macklem was actually testifying before the House of Commons Standing Committee on Finance. Okay, busy, I would say a rather busy few hours for him. All right, and this is actually the opening statement. I will send the link out later on. Okay, it's nothing that much to, I would say, pay attention to in terms of the statement. Okay, and towards the end over here, he actually highlighted that. Where is it? Okay, so he reiterated that the Bank of Canada raised rates by 0.25%. Okay, and also they indicated that they expect interest rate to rise further. Okay, so I think this is pretty much the most that this statement can give us. Okay, but okay, the fun part comes when he actually starts testifying, when he actually starts answering questions. Okay, and there's one major point that I would like to make when he actually answers his audience questions. I'm not sure who asked that questions. Okay, but his answer, his reply, I would say, okay, I don't really know what the question was, but his reply is this. Okay, I quote: "There is certainly considerable space to raise interest rates over the course of the year. If we have to move more quickly, we are prepared to do that. I'm not going to rule out a 50 basis point move in the future." Okay, so this line itself, I would say, basically put a aggressive rate hike back on the table. Okay, so the market will be worried that with the ongoing war and things like that, will it be that the Bank of Canada were to adopt a less aggressive interest rate hike? Okay, just like the Federal Reserve. Okay, that with this ongoing war will the Fed actually be just carrying out a 0.25% rate hike in March and in subsequent meetings, rather than looking forward towards a 0.5%. Okay, so the same applies to the Bank of Canada. But right now, okay, I think Keith Macklem has made it clear that if there's a need to, okay, we will increase interest rate by 0.5%. Okay, and what does he mean by if there's a need to? Okay, meaning if inflation were to carry on, okay, run hot, even hotter than the previous data releases, okay, that is something that the Bank of Canada, okay, will take into consideration seriously, okay, when it comes to a decision of whether or not they should carry a 0.5% rate hike. All right, so inflation. Okay, that is the main economic indicator that we will be paying attention to, or rather we have been paying attention to, for many of the for many of the countries, okay, to determine if the central bankers in their respective countries will carry out a more aggressive rate hike. Okay, so that's for the Keith McCallum's testimony and of course his press conference. Okay, so at least at the moment, okay, we can still expect aggressive rate hike coming in from the Bank of Canada. Okay, unlike the Federal Reserve, okay, which the Jerome Powell, okay, has just recently kind of like, I would say, toned down the aggression, okay, the potential aggression that the Federal Reserve may carry out in terms of rate hikes. Okay, so at the moment, do we have any questions on this Bank of Canada's rate decision, Keith McCallum's what do you call that, testimony and things like that? Okay, so there's no question at the moment. All right, I'll be sharing the links to the statement, for the OPEC Plus and the Bank of Canada's statement and the speech by McCallum shortly. Okay, so with that, I will hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
All right, thanks, Kimmy. And look, quite a lot has been going on with the US dollar as well. So I'm going to jump to the chart there now. And we've got 97.96 on the US dollar index. So we have seen some recent developments out of Ukraine that's looking like it's definitely helped the US dollar. But like I mentioned in yesterday's call, we saw some anticipation into the NFP release. Now, actually trading around the news event itself, which is in around 10 hours or just over 10 hours, has proven to be very difficult just because, you've got the data that's coming out and you've got the NFP unemployment and participation rate, among other things that are getting released. And it can, get a little confusing, and price itself can be very volatile and quite tight in its trading range. So it makes it challenging, but we didn't see the pullback to really anything close to 97 flat. And we have seen really price, rallying with no resolution yet with Ukraine and Russia. There was a second meeting and that still isn't yet leading to any clear-cut resolutions or any way sort of to see some sort of improvement here. Now, what I want to go through is also briefly the news that we did see coming out. So there was the Fed Chair Jerome Powell was testifying. So this is just for Thursday. We had ISM service PMIs come out a little less than expected. And then that was it for US news. With later into the US session, there is developments that get reported on with Ukraine, because that's where a lot of the fighting occurs. And for us in this time zone, it's very, very early morning in Ukraine right now, with around 8 hours difference between GMT +8 and where the incident's occurring in Ukraine. With Russia still really, it's not really improving from what I've seen. So we saw gold rally a little bit too, but again, it's been very difficult to sort of get any sort of flow identified with a direction. Now, we do have, as we can see, we've got the average hourly earnings, we've got non-farm employment change, we've got unemployment rate. It's all coming out. Now, this is 8:30 in the morning. This is not GMT +8 time. This would be local time. So what that means for us is it's 9:30 in the evening. So if you are looking to trade, just be a little cautious. We've seen a significant move on the US dollar already, and we have all of this going on with markets getting a bit jittery with interest rates approaching that first increase in the US. And I'll just quickly go back to the charts just to show you what we've sort of been dealing with. So we'll go to the Dow Jones to start. On the daily, just to get a bit of a barometer on risk. That's, had a rally, then, the daily candle has, moved lower and closed below the previous close there of that candle. So very choppy. We've got the S&P 500, similar situation. And then we've got the NASDAQ now. Again, NASDAQ down a little more. So not really being able to pinpoint a clear thing to look out for. Just be cautious through the whole session, I would say, is what I've found is probably best, because we do still have, let's go to the Brent crude oil price, which is more the global oil price. That went up to 122.59 per barrel USD. And now we're currently closer to 115 flat. So you can see the turbulence that we've had. And then gold as well. That's, again, being a little tricky. And you can get some pretty aggressive wicks. So if you are long and then you've got to stop, you've got to be cautious of that for gold if you're trading that on the lower time frames. But really what I would say is it's going to be interesting to see what this NFP comes out at. But when in doubt, potentially just go to the other pairs not correlated to the US dollar, not even with the US dollar in the actual currency pair. If things are moving but a bit unclear, there could be opportunities elsewhere, like we talked about with the yen yesterday. So we do have Jin now with the CAD as well, because it is Friday, and I'll finish up with a crypto analysis for Ethereum and Bitcoin. So we've got the CAD here now with Jin. So I'll hand it over to you now, Jin.
Thanks for that, Scotty. So non-farm payroll Friday, it's so weird to be not as excited about the non-farm payrolls this time around, because several things is that despite the numbers, we're still overhanging with the conflict that's happening at this point. So what could happen here, looking at the news, here, non-farm payroll numbers to be released tonight, not expecting big movements there, but as Scott was just sharing with you, we have been looking at the dollar gaining some strength across the board, the dollar index gaining some strength across the board. So jumping straight into it, Gibbon was just sharing with you the Bank of Canada's rate increase, their stance with the possibility or the approach that they could be looking at further rate increases, or even the thought that they could be quite aggressive with their further rate increase. What we could be looking here in terms of the USCAD, right, shared with the club members on Tuesday night, this trade idea on the H1 time frame, where we're looking for it to test and reject this 1.2712 level, and once it closes below, you could be looking for that trade down towards that 1.2622 support. That trade played out very nicely. Right now, over the past couple of days, it has retraced back up towards the 1.2712 resistance level again. So back to the H4 time frame, what I'm looking for here is possibly even for it to track up and break above this 1.2712 resistance level. Because of that dollar strength pushing it higher, I think that we could be looking for some trade ideas if it closes above that 1.2730 resistance, or closes above this resistance with a bit of space, 1.2730. I wouldn't say that it would go all the way towards that, the next resistance of 1.2850. I think that would be a very nice trade, but also a bit unlikely in this case. This would be buying opportunity 1.2730, stop loss about 30 pips, take profit about 100 pips, a 1:3 risk reward ratio towards the upside. Could happen, but a bit unlikely. I think if you were to look into this trade, a 1:1 or 1:2 risk reward ratio would be a bit more reasonable, right? Looking to take profit at about that 1.2790 resistance level, or take profit level would be more reasonable. But bear in mind that we're looking at oil prices increasing. We're looking at the Bank of Canada possibly being more aggressive with their rate increases. We're looking at possibly further strength towards the Canadian dollar. So what I'll be looking for at this point is for it to track higher, possibly react towards this point or towards this 1.2790 level and turn back down. So in this case, I'm still looking for possible selling opportunities into the future, But at this point, short term will be for it to break above this 1.2712. Look to buy above 1.2730. Stop loss 30 pips, take profit 60 pips towards the 1.2790 level. All right, so keep your trades a bit more short term, a bit more managed, especially with all the uncertainty. But for sure, trade the non-farm payrolls, trade the way the markets have been moving now, but don't look to hold any trades over the weekend. I think we might be looking at some surprises in terms of headlines, in terms of actions, in terms of the conflict that's happening in the Russian-Ukraine borders. Don't hold your trades over the weekend. I think we might be looking at a surprise and some big gaps over the weekend and into Monday. With that, I'll pass it back to you, Scotty.
All right, thanks, Jen. And so a little bit of crypto just to finish off for today. Now, Bitcoin. So it did have a little rally, and we actually got close to breaking out of this resistance level, close to 46,000. Now we are pulling back, as you can see, with this is the risk-off event that we had with the attacks on the Ukrainian nuclear power plant. But there's a lot of different conflicting news coming out on that. And really, I think for a conservative call, it would be, and I mentioned this last week as well when I talked about crypto, is that I want to see it continue to pull back before really I'd entertain a buying opportunity closer to really at least 33,000. I don't really want to chase these shallow pullbacks. I would prefer just to play it a little safer, especially with the situation on interest rates. And there is market commentary that it's going to be just the 0.25 or the 25 basis point increase when the FOMC meets this month. But if that, for some reason, if something changes in the market, then we really could see risk assets such as crypto really be sold off aggressively. So I want to see how things react first before getting into Bitcoin. Really, I mean, Bitcoin and Ethereum is sort of what the focus is, just with the market sort of liking those more so, and there's a little less volatility than the alternative coins. They seem to move really wildly, and it's sort of almost impossible really to actually sometimes get in and out as you wish, just with the changing volumes that take place as well. So I tend to be really cautious about those. So, but with Ethereum as well, really, 2100 or so, 2150, and then there's a lot of daylight in between there. So I just want to see how it holds up to that before I look into getting into Ethereum as well. So definitely some key times here now in the markets, just to see how crypto does react, if maybe Bitcoin does get bought up a little bit, because the Russians living in Russia, having some inflation issues because of the Russian ruble, and just gonna see how things pan out over the weekend. And then perhaps there's a third announcement of a meeting, and maybe see what that happens, and we could see some negotiations get a little better in regards to working something out. So we'll just have to wait and see on that, because it is still very dynamic. And I would agree with Jim, just be cautious. And again, if you're in the LCMS Trading Club, come in. If you've got something to ask, please feel free, and we're here and happy to help. So those are my thoughts there as well with crypto. And that is the end of the session. And again, make sure you do watch this if you came in a bit later, to catch Kim Hong's thoughts on the Bank of Canada's interest rate decision and the OPEC Plus meeting as well. And that is it for us, guys. So thank you for joining us, and I hope everyone has a great weekend, and see you all next week for Monday's currency call. Bye for now, everybody.